Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about RAMCO Cements. Subdued numbers, but numbers are improving on the upside. So let's understand about the business and let's understand what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and anyone taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Ramco Cements, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, a number of podcasts on short-term and medium-term call that I put up. I put up also stocks that I feel for monthly picks, which I did put up just about a couple of days back. So you can have that. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company, leading mid-cap cement firm headquartered in Chennai. Ramco Cements is prevalent in South India mainly, and the market cap of the company is between 18 to 20,000 crores. Produces Portland cement, ready mix concrete, and dry mortar products. They also sell electricity products from windmills and thermal plants, so electricity is also sold. A decent dividend payout. Current total production capacity is around 16.5 metric ton per hectare, so per annum. So it's around 16 and a half metric ton. So that's quite decent for a company like Ramco. If you look at the numbers, market cap, that's what I said, so around 20 to 22,000 crores. Sales have been up by around 5%. Profit has surged by over twofold to 207 crores from 95 crores. Now, why I said subdued numbers was because of the sales numbers. Sales have not been that great. Profit surged because of a number of reasons, not just because of operational efficiency, although operational efficiency was there, cost cutting was there, but mainly we look at sales for cement numbers, and ACC and Ultratech has come out with very decent sales numbers for the quarter, whereas Ramco has fallen behind. So that's why I put up the headlines that subdued numbers. Although on the bottom line things look really good. Economic revival has helped business immensely, and we have seen that the business has propped up over the last 3 4 months, even though this has been the pandemic year or the post pandemic year, etc. But things are looking very good. Return on equity of 11%, operating profit margin of 22% is decent, not extraordinary but decent, and it trades at around 29 times earnings. And that's what I'm saying, that the numbers it should increase more because it is trading at expensive valuations at 29 30 times earnings. If you look at the performance of the stock is breaking out after a 2 year consolidation, and that is pretty good. And the sector as a whole is on an upsurge. So you have to understand that growth stocks are coming back into focus after many years, probably a decade. So since I have started investments, since I have started looking at the markets from 2011 onwards, I have not seen such positivity and such you can say good vibes with respect to infrastructural growth, with respect to growth stocks, and with respect to government support towards growth. I have not seen that, and that is kudos to the government who is doing a lot for the economy and trying a lot for the economy. Let's see how the executions work out, but still, that is halfway to what we need to do with respect to growth. So the sector is surging, and I believe that this could continue for at least a couple of years. And numbers have remained strong on the bottom line, have remained decent on the top line. A dividend payment has not been that great so far, so they need to probably expand, and that's why dividend is not that great. So I feel all these types of growth stocks which are related to infrastructure, don't get into probably infrastructure stocks because they are debt laden, and you could be be in trouble when the things reverse. But get into infrastructure ancillaries like paints, cements, products or manufacturers who make high end, you can say, machinery for infrastructure and so on and so forth, or by debt free real estate companies, or real estate companies which are large and doing very well, or companies which are lending to these companies and are pretty large and have good books under their belt, so something like an HDFC, etc. So all these companies will keep on making you money. So cement is one of that sector. Strong domestic institutional holding, 12% free float is with the retail investors. Now debt is increasing and that is a worry, although right now interest rates are low, so that won't have any effect. But once the interest rate cycle reverses, I think there'll be huge selling in stocks like these in which debt are increasing, so you have to be careful in this front. So why the upsurge has taken place in the stock? Domestic economy is on a recovery and we've seen that. So the bottom was probably the June quarter of last year, and now we are staring at June quarter of 2021. So that's how time passes by, and probably on a base year, on such a low base for last year, the numbers for most of the companies, 90% of the companies, would be very good, and Ramco Cements will not be different. And that is why I believe that the stock may continue to surge, and we are seeing on the ground a recovery with respect to growth stocks, and that is pretty evident that companies are doing well with respect to what they are doing on the ground. Real estate and infra space are getting back into track, and that is pretty good. And retail sales have increased in many parts of India, and that is the biggest positive. And once retail sales increase, once people go for renovation of their homes, they need these kind of materials for restructuring, etc. And I am seeing restructuring happening with respect to a lot of you can say uh, houses here around my place. So that is what is happening. Raw material cost is increasing, and that is a kind of a worry. That is what I feel. I still believe that if that keeps on increasing, then that's a deterrent with respect to cement companies, with respect to oil consumption companies, whether it is you can say tiles, etc., cement, and even companies which consume like sugar, etc. So there are many other companies, so you have to be careful with respect to this, and understand as to how this is going. Projection of further up move in the next 2 years, it seems like the next, as I said, 12 to 18 months could be very good for the infrastructure space, for the real estate space, and that's where, because of the interest rates being down, people will look to buy more homes, so renovations would be there, building of more homes would be there, and usage of cement would be there. So sector has come back into favor, and which could remain in favor for the next 12 to 18 months, and that is a huge positive. So my call on the stock, hold if you have it, and buy on major declines for a 1.5 2 year period. And this should do well. Cement sector should continue to do well, and buy either large cap cements on good quality or good quality cement companies. Don't go very low down the ladder, because that could have you into trouble. Keep relevant stop losses in place always, because these all stocks are volatile, and this market has run up a lot. So have stop losses in place, make your money, book profits, and put between 5 to 10% into such stocks. So this was my video on RAMCO Cements. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.